So crypto is not slowing down right now, right? Before we get into anything, this is not a crypto-based channel, but we do have another update for you because Bitcoin is about to explode. And I'm not even joking when I say this, right? So I'm just gonna jump right in and show you something really, really quickly. So our last video, if you haven't checked it out, make sure you do so because a lot of big news just came out. BlackRock, which is the largest asset management firm. Bro, just remind everyone real quick, bro, how much do they have under assets?
$10 trillion under assets.
Did you
assets
trillion?
The big T, boy, trillion.
Yeah, okay. So BlackRock having $10 trillion under assets just said that they will be filing for a Bitcoin spot ETF. So there is a big difference between a spot ETF and what was currently there for Bitcoin. Bro, can you just explain that real quick, bro, for people who might be confused?
Yeah, because what's currently there is ETFs based on Bitcoin's futures contracts, which are derivatives. It's different than having direct access to Bitcoin itself. So the ETFs that they're filing for now are actually going to give you direct access. They're being invested in the actual coin itself, not futures contracts, the actual authentic, beautiful Bitcoin.
That's a fact. And basically, BlackRock came out and said they will be filing for this, right? So BlackRock is basically like the LeBron James, Michael Jordan, like the GOAT, honestly, Kobe Bryant of sports in terms of crypto, right? It's the same exact thing. So basically, when they came out and filed for this, other firms like Fidelity, like Vanguard, like Invesco are coming out and joining them now, guys. So when you guys scroll down here really quick, and we will put this in the description below, it says in the past 2 weeks, BlackRock, WisdomTree, Invesco, which is huge, I want to say, Vanguard and Bitwise have filed applications with the SEC for a spot Bitcoin ETF. Right now, it's like Bitcoin's hovering around at 30,000, 31,000, but with all of this going through, it's only going to increase the price of Bitcoin itself because now people feel more safe. You don't have to worry about Coinbase. You don't have to worry about all these like sketchy things like Binance. I'm not saying like Coinbase is sketchy or nothing like that, but some people don't feel comfortable, bro. If you're older, you might not want to put in your social security or take it off the ledger and, keep everything off the website. You don't want to do that. Now you don't have to.
Yeah, it's tough. It's tough. Like the technology that it takes to always have a safe place to put your ledger password, and people don't want to deal with that. Everybody likes ease. And to be honest, think about it. Even we were talking earlier, you were like, yo, man, I might think about just throwing that in my retirement. Like,
bro, you think I'm definitely taking whatever I have on the ledger and putting it on Fidelity when this gets approved.
Come on, like think about it. You think you're the only one doing that? Most people have the same thought process, even if they're allocating even just 5% of their retirement funds into that Bitcoin ETF. And so that's a whole lot. Like people don't understand. That's where the real money is in the ETF flows. So if that comes into Bitcoin now, you're talking about the market cap of Bitcoin reaching levels that it's never reached before. Yep. Like this could be huge.
And it's something I really want to point out, right? So one of the biggest things we just said, ETF is obviously huge. And we already talked about gold in the last episode. So once again, like people think of Bitcoin as digital gold. So when gold had its ETF come out, that exploded the price of gold. So something similar could happen, but it's not only about ETFs and all that, right? Just look at this for 2 seconds. It says retail investors are pouring a record 1.5 billion per day into the stock market, bro. So the reason why I want to bring that up is because when you look at this chart, it's basically showing you retail daily net flow into US equity, so like the stock market, and look at the S&P. This is actually insane how much money is going into it from retail's perspective. So people who were just scared, right? We're not talking institutions, we're talking about just regular retail traders. The people who were scared now could that 1.5 billion could also be going towards the cryptocurrency world, right? So that's another thing to think about. But let's talk about some charts, bro. Like, go ahead and share that.
Yeah, I'm gonna share that. And while I pull this up, I just want to comment on what you were just saying, where like, okay, first and foremost, I do think that how all these retail investors are investing in the stock market right now. People who have financial advisors or who have their money being advised by professionals, they're gonna be looking at them like, yo, if you're not investing heavily right now, you're allowing me to miss out on a lot of funds. They're going to start putting pressure on these asset managers to make sure that make sure you're investing in the markets, which is only going to send more money into the markets because they can't sit on the sideline because now you look like, yo, you're not providing your customers with a good service because the stock market is up however much percent this year.
Yo, that's one thing. Because remember, we talked about it, bro. Remember, while you're pulling it up, real quick, guys. If you guys didn't peep this earlier, when the S&P was down and Nasdaq was down, like I think over like 20. I don't remember the exact percentage, but it was obviously more than 20%. But then, like reversed, Nasdaq is up more than 20%. So from being down 20 to being up 20, that's a 40% turnaround. And imagine you were just dollar cost averaging like we were telling you to do, like the two handsome guys on YouTube, young, handsome, like, come on now, you got to listen. You know what I'm saying? Like, I don't know who they are, but they must be smart.
They must be. They must be. So check out what they saying here. All right. So this is a chart of Cardano, basically. Cardano, as you guys see, has really, this is a daily chart. So you can see in the past number of days, they pulled up out of this major slump that they were in. And then they're showing some signs to continue this upward movement. They retraced a little bit. They're showing signs for upward movement. And for those who have never seen a chart before, just remember, if the direction of the chart is going down, that means that the price is going down. Once you see it coming back up, that means the price is coming up. As well as Bitcoin is clearly looking pretty bullish of these recent days. Remember, this is a daily chart, meaning every single candle represents one day. So as you see it in the past multiple days, Bitcoin has been pushing up. And I actually want to show you guys Coinbase now. So Coinbase, like we said, we made an episode showing y'all that Coinbase had the news come out saying the SEC wants to pretty much get rid of them.
Well, they're suing them.
Yeah, they were suing them. Now look at this, guys. Look at this, y'all. The day that news came out, Coinbase severely dropped in price. We're talking about a drop in price from $63 to opening up at $47. It's like a $16 drop off. Crazy.
June
overnight.
6th, right? That was June 6th.
Yep, June 6th. Look what happened on June 6th now. When we opened up the next day, Coinbase immediately made a push to the upside, and we've never been back that low since that news came out. And on my Instagram and in my community, because if you're not a part of the trading community, definitely contact me, or we'll put the link in the description as well, so you can be part of that community. I told everybody that Coinbase is going to make a big move to the upside, even though the news was out saying that it's going to be, the SEC is trying to sue them. This is what they do, guys. Don't let them shake you out your positions. If you're strong in something, if you believe in something, don't let the manipulation of the market shake you out your positions, because you can see that the news dropped and all it did was give big money investors a better price to get the asset. They got it down here at 47, and now this thing is up 30-something% ever since that drop off. 30-something%, and that's very similar to what happened on the S&P 500. You guys might remember, we've shown you guys this when it comes to the Silicon Valley bank crisis. Look what happened on March 10th. March 10th right here, you see we dropped off because the banks came out saying that, the news came out saying that Silicon Valley Bank is going under, and everybody thought we were going to 2008 again, and everybody was panicking, and we've never been that low ever since. So that's a perfect example of how they try to make news come out to scare you out of actual valuable things like your beautiful investments. So please don't get shaken out your spot. Stay strong.
Yeah, I think the biggest takeaway, right? So at the end of the day, guys, to make sure we get back on the crypto path here is, one, if you guys believe in crypto, you guys shouldn't be panicking. Because at the end of the day, this should be giving you more comfort that, we have these huge institutions backing us up now, and it's going legitimate. I don't want to say it's going to 100% happen, but it's like 99.999% chance it will go through. This will get approved. So that should give you comfort. But even just look back at the history. Like last year, we were making videos about JP Morgan being involved in crypto, and other big four companies, like consulting firms, being involved in crypto, because it's been had this exposure. So this is not anything new. So moral of the story is, don't get shaken out. Continue dollar cost averaging. don't put too much exposure into something if you think it's risky, but still have a little bit of exposure because you don't want to miss the boat. That's always something that we will encourage you guys to do and check out. And that risk management exposure is completely up to you. It depends on what you want. Like, Rel, you might say what, 10% if as like something that you might do?
Yeah, that's actually pretty accurate right there too. On something that I would do as far as my overall allocation between your stocks and your crypto, like that's
exactly. So that's someone who 10%, right? For me personally, you guys don't need to follow. I'm at 30%. You guys do not need to follow me. Do not need to follow me. I feel comfortable doing that because I'm young enough. I've done my research, and if I lose it, I sleep perfectly well at night knowing this is a risk that I'm willing to take. So it all depends on yourselves. But if you like this type of episode, let us know exactly how you feel by commenting below and liking this video. Plus, subscribe to the channel and hitting that little notification bell because we drop
2 videos a week.
And you don't want to miss them. Make sure you check out our episode on Monday because it was a dope episode and gave you a lot of updates on what's happening within the crypto world. But we will check you out next Monday. Until then, peace.
Peace.
Soundstripe.